Hey, what's up, everybody? This is Simon with Cryptechology, and this is something I want to go over with that I like to check. Being a former trader, I like to go over charts and some analytics. So here we go. ETH, the beneficiary. As we don't obviously already know, ETH and Doge has been the primary recipient of good portion of capital rotation. The extraordinary price performance over the last 3 weeks. To demonstrate this effect, we can plot the spending behavior of the reasonable old Bitcoin UTXO between six months and 3 years, and compare that to the ETH price chart. While this is only empirical observation, correlation versus causation, the distinct increase of these older BTC being spent back into circulation after a prolonged period of holding makes a compelling case. ETH prices have almost doubled in this time from 2,200 to an all-time high of 4,000. As we know, the all-time high was about 4,300. So this chart is showing us Bitcoin spent outputs versus the ETH price. So we're seeing an ETH rotation and an increase in this chart right here below. You can see the relative magnitude of this capital rotation in the spent output age bands, whereas noticeably uptick in old BTC spending behavior started in mid-April as BTC price consolidates. Now we're starting to see an ETH rotation. Bitcoin hodling. Now here's one of the charts that I'm really excited and I really want to go over. Activity on the Ethereum chain has increased significantly over the past weeks, indicating on-chain economic flows support this rally in price. The chain has seen a strong uptick across the board of many metrics including total number of smart contract calls, Uniswap transactions, total transaction rate, and USD settled in ETH transfers. So contract calls are going up. USD value settled increasing, the transaction rate are increasing, and Uniswap increasing. This to me is a bullish sign for Ethereum, where we're starting to get more use and more demand on the Ethereum chain. Finally, the Ethereum chain has hit another on-chain all-time high for daily transaction counts, as the increased gas limit provides a boost in maximum transactions throughput. A daily all-time high of 1.63 million transactions was achieved this week, representing a 22.5% increase over the previous peak, set just before 2017 macro top. So here we go. Here was that top at 1.33 million transactions per day, and now we're hitting that 1.63 million transactions per day. 22% increase from that previous. So this is a good sign that transactions are increasing. People are moving their Ethereum and they're utilizing and paying gas fees to interact with the network. New Glassnode content. Bitcoin's on-chain market cycles. Last week we released a second collaboration article with Bitcoin Magazine with a focus on cynical spending patterns of hodlers, speculators, and miners. This article aims to provide a foundational roadmap with key metrics that help measure where we are in a Bitcoin market cycle. All market cycles are unique, but the human response to profit, loss, and incentives can be strangely predictable. The trick is knowing what to look for in the data on chain. So be sure to check out and read this article. So let's just go click on that article real quick to see what it says. Bitcoin is a free market. We know that. In this article, we explore on-chain metrics that provide insight into sentiment and macro spending patterns of hodlers, speculators, and miners. In bear markets, interest in Bitcoin protocol typically wanes, and by the end of it, only Bitcoiners, smart money, and miners remain standing. For on-chain data, the patterns and fractals we observe during bear markets are largely driven by these low-time preference accumulators. The chart below shows a supply accumulation by long-term hodlers and how it consistently peaks during the darkest times. Bull markets, on the other hand, are very different beasts. The dynamics between on-chain supply and demand are in constant flux as new speculators and old hodlers compete for block space, profitability, and test their resolve to hodl through epic price rises. Old hands typically begin to distribute in bulls, transferring their expensive coins into the hands of new speculators, who return the favor in bears, selling cheap coins at a loss to hodlers. As investors enter and exit this market, they leave behind on-chain footprints that capture the aggregate hodling conviction and spending patterns. Through study of Bitcoin cycles, we can establish sets of assumptions and fractals to describe the balance between supply and demand. With an appreciation of market cycles and how different parties typically behave, we can use these patterns to better gauge the progress of bull and bear markets alike. Bitcoiners and the smart money. Bitcoiners and smart money tend to have a similar operandum. Their incentive is to accumulate sats as cheaply as possible and realize profits late in a bull cycle. Old coins are spent, they are reclassified as young coins, increase to young hodl wave thickness. Typically, smart money coins are spent only late in a bull market, and when young age bands begin to swell in size, it may indicate a change in macro sentiment is underway. Note, coins older than 5 to 6 months are usually considered coddled coins. So we're starting to see an increase here in these new coin area. I believe these are the mature older coins. Seems to be doing fine. Let's see. Slow down in altcoin spending. What do we have here? Accumulation versus distribution. So it's accumulation, distribution, short-term speculators. Volatility specializes in shaking out weak hands. The market often rewards long-term holders who exercise patience and punishes more inexperienced market participants and late bull cycle entrants. Long-term holders recognize this and tend to wait for peak market hype before realizing profits on expensive coins. In the current bull market, we have seen the first major spike in young coin supply. What is interesting is that the warmest colors, youngest coins, have not spiked as high this cycle. This likely reflects two phenomena. One, an increased conviction of coin holders, including new institutional buyers, as the Bitcoin thesis is tested and proved on the macro stage. Greater access for speculation via off-chain derivatives, leading to young coins having a smaller on-chain footprint. So it looks like we still have some more room to go. With this wealth transfer in mind, we can observe the proportion of old coin supply 1 year to 2 year in the blue and compare it to the young coin supply 1 week to 1 month. That's going down in the blue. That's going down. And what's this? That's increasing here.